Welcome to My Steel Commodity Flux, the podcast where we track the trends, turns, and turbulence shaping global commodity markets. Today, we're looking at a story that has caught the attention of LNG buyers around the world. For the first time since late February, two Qatari LNG cargoes have successfully departed the Persian Gulf, suggesting that access through the Strait of Hormuz may be starting to recover. But does this mean Qatar's LNG exports are back on track? To help us unpack what's happening and what it means for China and the broader global LNG market, we're joined by Gary Gao, Gas and LNG Markets Research Lead at MySteel Oil Chem. Gary, welcome to the podcast.
Thanks for having me.
Gary, let's start with the latest news. We've seen two Qatari LNG vessels leave the Gulf. Why is this such an important development?
Yeah, this is the first meaningful sign of progress we've seen in quite some time. Since late February, the Strait of Hormuz has been effectively closed to most Qatari LNG shipments following Iran's closure of the strait. So the fact that two LNG carriers have now sailed to Pakistan's Port Qasim is definitely noteworthy. It suggests that, at least under certain circumstances, some cargoes are able to move again. That said, this is more of an early signal than a full recovery.
So, should the market take this as a sign that Qatari LNG exports are starting to normalize?
Not really. These shipments are special cases under a government-to-government arrangement with Pakistan, which is currently serving as a mediator in the regional conflict. A few additional cargoes may follow, but for now, they remain exceptions. Most Qatari LNG is still effectively stranded inside the Gulf. So, while this is certainly encouraging, it doesn't mean exports have broadly resumed.
Just to put this into perspective, how important is Qatar in the global LNG market?
Qatar is absolutely critical. In 2025, Qatar exported 80.9 million tons of LNG, accounting for about 19% of global supply, and all of that volume moves by sea through the Strait of Hormuz. So when the strait was effectively closed, it had an immediate impact on global LNG flows. To make matters worse, parts of the Ras Laffan terminal were damaged in mid-March, which further disrupted production. Operators are preparing to restart the facility, but export capacity remains heavily constrained.
What are the key conditions that need to be met before Qatar can fully restore exports?
There are two main requirements. First, the Strait of Hormuz needs to reopen to normal commercial traffic. Second, damaged production units at Ras Laffan need to be repaired and brought back online. Both of those conditions need to be met before Qatar can return to normal export levels.
And Gary, China is one of Qatar's biggest customers. How has this disruption affected Chinese LNG imports?
The impact has been quite significant. In 2025, China imported 20.26 million tons of LNG from Qatar, which accounted for 29.6% of China's total LNG imports. Since the closure of the strait, China's LNG imports fell 40% year-on-year in March and another 41.6% in April. Terminal utilization rates have also declined, so this disruption has clearly tightened supply for Chinese buyers.
If the Strait of Hormuz fully reopens and Ras Laffan ramps up production, what could that mean for China?
We could see a fairly quick rebound. A large number of delayed cargoes under long-term contracts could start arriving as early as June. Around 11.9 million tons per year of Chinese contract volumes with Qatar could resume. That would lift import volumes and push terminal utilization rates higher.
And what about the broader global market?
If Qatari supply returns, the global LNG balance would become more comfortable. That would likely put downward pressure on spot prices. And with more supply available, buyers would have greater flexibility to return to the spot market.
Gary, the recent US-China talks have also drawn attention from the market. What could they mean for China's LNG supply outlook?
They could be quite relevant. Energy procurement was one of the key topics discussed during the recent US-China talks, and LNG is certainly an area the market is watching closely. The United States exported 120 million tons of LNG in 2025, making it the world's largest LNG exporter. At the moment, China is not importing US LNG because of tariff-related restrictions. If the two sides are able to reach a procurement agreement, US LNG could offer China a stable alternative supply source, help reduce its reliance on the Middle East, and give Chinese buyers more flexibility in managing supply risk.
So, Gary, if you had to sum it up, what's the key takeaway for the market right now?
The departure of these two cargoes is definitely a positive signal, but it's still too early to call it a full recovery. Most Qatari LNG remains trapped, and a meaningful rebound depends on both the reopening of the Strait of Hormuz and the restoration of production at Ras Laffan. For China, the situation is particularly important because Qatar remains one of its largest LNG suppliers.
Right, so the main message today is pretty clear. We're finally seeing some signs that vessel movements through the Strait of Hormuz are restarting, which is encouraging. But at this stage, we're only talking about a handful of exceptional shipments to Pakistan. Most of Qatar's LNG exports are still unable to leave the Gulf. A real recovery will depend on two things: the strait reopening to regular commercial traffic, and production at Ras Laffan returning to normal. For China, that matters a lot. Qatar is one of China's biggest LNG suppliers. So once exports resume, we could see a wave of delayed cargoes arrive and a sharp rebound in import volumes. And at the same time, if the two sides reach a procurement agreement, US LNG could offer China another supply option. Gary, thanks so much for joining us today.
My pleasure. Thanks for having me.
If you'd like to follow China's LNG market in more detail, explore our China LNG database report and China Natural Gas Market Monthly report. We provide in-depth coverage of China's LNG imports, terminal utilization, pricing trends, and overall supply and demand dynamics. For more information, please visit mysteel.net or contact us at inquiries@mysteel.com. Thanks for listening to My Steel Commodity Flux, and thank you again, Gary Gao, for sharing your insights. If you found today's episode helpful, be sure to subscribe for more analysis on global commodity markets. Until next time, keep tracking the flows.